Friday I talked about trade management being the best Forex strategy. I firmly believe that, but I also believe that a random entry is not a great plan. Today I'll show you an entry strategy that I like. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. My voice is probably even worse than last week. Please bear with me. Hopefully I won't lose it completely. Today I'm going to show you a quick entry strategy that will help you in your trading. After that I'm going to show you a good looking weekly setup on gold. But first, updates on our open trade. Yes, once again I've only got one open trade. And then later on the trading maxim for today. Let's do this thing. Remember to click the subscribe button and hit that bell so you don't miss learning any of these great Forex strategies. Alright, on to our open trade. I mentioned Friday that I sold the Bitcoin cross at 60.62 right here on this close. It's been retesting the broken range right here all weekend with ever declining volume. So we've got a small consolidation forming right here, with a real bearish tendency because of all these rejection wicks up here. I'm still holding this. I believe we'll get a drop on it in the next few days. Remember, we got our profit on the New Zealand Swissy, but I mentioned in Friday's video that I want to continue to watch it to see what our results would have been like if I had used the parabolic SAR for following the stops. As you can see, parabolic SAR is getting close to what would be our break-even stop loss right here at 63.89ish, which was our entry point. Tomorrow we may be able to move the stop a bit. Remember, I'm no longer in this trade as I closed the second half at the original first target several days ago, right here as I recall. This is just a test to see what the result would have been had we used the PSAR to follow the stops. Okay, I'll show you the gold setup shortly, but first I'm going to show you this great Forex strategy. Today I'm going to show you a great Forex entry method that I've tested and used a bit myself. The Aroon indicator, sometimes called Aroon up and down. Investopedia defines the Aroon as a technical indicator that is used to identify trend changes in the price of an asset as well as the strength of that trend. For you geeky folks just like me, here's the formula for calculating the Aroon indicator. This formula shows 25 periods, but I actually use a 14-period Aroon, which is the default for both TradingView and MT4. Installing the Aroon indicator on TradingView is just like any other indicator. Click up here on Indicators, click on Built-ins, and then select Aroon. Now you guys know how I am. I'm never satisfied with the original colors. I believe the original colors were like blue and orange or something. I don't remember now. If you want to change that, just hover over the name over here on the left. Click the gear icon. Click Style. And then you can select whatever colors you want for the up and for the down. And I also double the line thickness as usual for my old eyes. And when you've done that, you can click on defaults and save as default, and it will come up with those colors every time you pull it up now. Click OK. To me, the downside of this indicator is that you have to remember what the buy color and sell colors are. I use my standard red and green, so I don't have to think about it too hard. Anything that you can do to reduce your mistakes when taking trades is a good thing. In the interest of complete transparency, I'm just going to start on the US dollar Japanese yen daily chart over here and show you all the signals. The first signal I'm going to show you is this crossover from red to green. So if the red is on top, you know that it's a sell signal. That candle happened right here. In the close of the candle, the ATR was 66. So our stop loss was 99, or 1.5 times the ATR, and our take profit was 66 pips. And it came nicely on the very next day and hit our take profit. The next crossover is right here on this candle. It's green over red, so you know it's a buy. So a buy on this close right here. The ATR was 77, our stop loss is 116, and our first target was 77. So you can see a couple of days later, came up here and hit our target. The next crossover signal is red over green right here, so this is a sell signal. On the close of this candle, right here, the ATR was 61, so our target was 61. It was hit a couple of days later. And the next signal was green over red, so it was a buy on this candle right here. And we've got a bit of a consolidation going on right here. The ATR was 69, so our first target was 69, and it got hit right here on this candle. And now we got a few losses. This crossover, red over green, happened right here, so this was a sell right here. ATR of 53, our stop loss was 80, and it hit our stop right there. This crossover, green over red, happened right here, buy signal. The ATR of 55, stop loss of 83, so it hit our stop loss right here. And then this crossover right here is red over green, so sell signal right here, hit our stop right here, and we missed this signal because it happened while this trade was open on this candle right here. So right here I showed you 4 wins, 3 losses. You may not get too excited about 4 wins and 3 losses, but you can make bank on anything that gives you 4 wins and 3 losses. Okay, I've used this for so long I don't even recall whether the Aroon indicator is included with MT4 or not. If not, you can look right over here at the MQL5 code base. This is the link. I'll include the link in the description below so you can download it from there. In any case, here's what the Aroon indicator looks like on MT4. Again, I've changed the colors. I think the up color was blue and the down color was red. And I've been known to use blue as an up color, but I wanted to be consistent with my coloring, so I changed this to green and red. And that's the Aroon indicator entry strategy. Remember, I'm showing you a bunch of different strategies on the channel here, but you need to pick one that fits your trading style and concentrate on it. Don't jump around too much or you'll never achieve your goals. And be sure to test everything thoroughly. Back test, go back several years. If you're going to be trading this on a shorter time frame, you don't have to go back that far. On a daily time frame, I would test it back for 3 or 4 years. Hey guys, there are 3 traders here that I think are really awesome, and I want to congratulate them right now. Guys, I appreciate you. I believe that your success is imminent. I know there's got to be more people on the sidelines that want to make a commitment to be a successful trader. So here's this week's challenge. Next video, I'm going to ask you to do a specific action step, and I'm not going to tell you what it is right now. So it's going to take an active faith on your part to see who is ready to make a commitment to be successful. This will be a 2-part series. Number 1, you're going to make the commitment in the comments on this video. And number 2, I'm going to see who actually follows through with their word. And as you know, honoring your word is really important. All right, let's take a look at the weekly gold setup. Gold has been in this dropping bullish wedge since early September, right here. The bullish wedge is a triangle pattern with a dropping point. It's typically a continuation pattern and will appear in a strong uptrend like this right here. I sometimes identify support levels like here and here just so I stay alert to a possible breakout when I see a strong bounce from one of these levels. In this case, 1440-ish and 1398-ish. Remember, a line is never just a line, it's always a zone, so the bounce from these levels may not be perfect. We'll be looking for a close above this pattern to go long. And that's our trade plan. We will simply buy a weekly close above the bullish wedge. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up at least to this volume average right here. If it doesn't quite make the average but makes 75% of the average, then we'll take a half-size position to reduce risk. You can calculate that by dividing this volume number by this volume average, and you should get at least 0.75. If you don't get at least 0.75, stand aside on the trade. The stop loss on this trade will be 1.5 times the ATR, and the first target will be 1 times the ATR. So that means, again, on the breaking candle, let's say it breaks up to here and you get a close right there at that level. You want to look at the ATR, multiply it by 1.5 times, and measure that distance down here behind the trade. For your stop loss, measure 1 times the ATR above the trade for your target. If after entering the trade we get a close back inside the wedge, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout above this pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit attached to it. That position will close automatically when the first target is hit. The second position will have only a stop loss associated with it, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on this trade. And that's the new setup on gold. My intent here is to tell you how I intend to manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your own trading. And that's my intent for the trading maxims, to help control your emotional impulses and keep you on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 19. Would you take that trade if your mentor was looking over your shoulder? This is actually a quote from my mentor, Casey Stubbs. Except he didn't say it to me. I got this from a trader that has followed us for a very long time, when she's not traveling anyway. Always think about what your mentor would say to you about that trade you're about to take. Would he be happy with it? Would he take it himself? Casey would say, does it follow your rules? This maxim has kept me out of many bad situations. Remember our weekly gold trade plan here. We're going to buy a weekly candle close above the bullish wedge. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And don't miss any of my trading picks. Sign up for my free trading picks email list so you don't miss them. I send out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or 2 on each one, and maybe some extra Q&A or training. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments, or in a training video, or both. And remember, the only stupid question is the unasked one. And don't forget, I'm asking you to take a leap of faith by saying you're willing to do whatever it takes to be a successful trader. Comment below if you're willing to do that, and I'll share with you on Wednesday what your action step will be. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I will see you next time.